So guys, एक important topic के बारे में I'm thinking कि just a thought आया. I was thinking that I should talk about this because I have been lately getting so many comments about it. Eventually, like I was doing some edit for a little bit and I was working on something for all of you, obviously. But this comment has been constantly coming that AI will be replacing credit risk analyst job and all that, right? So meanwhile, I'm editing and meanwhile, I'm preparing something for you, a very good thing. Maybe let me talk about this as well. So I thought let's go live and let's talk about this thing. Uh, so obviously, first of all, many of you ask like, can AI replace the credit risk thing in India? And I don't think so. That replace is the right word. Uh, Reason because there is nothing that has been replaced as of now. Like the thing is that the things are evolving. Okay, over a period of time, things are evolving, and I know it's midnight and it's late for all of you also. But I wanted to talk about this. So tonight, I'm going to put a real world banking problem in front of you. So just assume that a company has come to a bank and asking for like 10 billion US dollar loan. Do you think the bank can make that decision on the basis of some chatbot, some agent, or some AI? How many of you think that that is possible? I don't think so that AI can do that. The reason is that thing is not like that AI cannot do it. The major thing is that the regulatory involved, because there is this money which the bank is going to lend to the customer. That money belongs to all of us who are the depositor in the bank. So eventually, it's not that easy for the bank to give that money so easily because there are regulators like RBI, Reserve Bank of India, in in India as a country. So they make sure that the money is invested in proper way by the banks or when they are giving loans, mortgages, and all that. Similarly, in US, Fed used to take care of that, and Fed is doing that. In Canada, OSFI, the Office of Superintendent, is usually taking care of all of this. So now this 10 billion US dollar loan is not happening just beyond the basis of the AI, at least for a couple of years. That's what I can guarantee. Okay. So the simple, straightforward answer is no. AI is not going to replace the credit risk analyst completely. That is not at all possible because when you go for regulatory review, there is somebody who they need to keep accountable, and that is us human, right? We are doing so many calculation mathematics and everything, and we are accountable as a model developer, as a model validator. uh, Nothing is like just done by an agent here. Okay, now I would say, to be precise, simple answer is no. Okay, and don't overthink it, just your first instinct. Okay, because at the end of the day, it's ultimately some program which is working on the back end. It has a brain, neural networks are working there, but as per the regulatory guidelines are constantly changing, right? Every couple of months, there are some advisory from the regulators which are uh, need to be followed, right? It's not that easy. So that is my perspective on this. So many of you have been asking this, so that's why I wanted to like put my perspective on that. Uh, the credit risk framework, how that actually works. So let's build our decision format. I want you to remember four questions. Number one, how likely is the borrower to default? Number two, that where PD comes in, like where exactly PD comes in the picture. Number two, if the borrower defaults, how much money we are exactly going to recover, right? That is LGD. And number three, how much money will actually will be outstanding when the borrower is defaulting. That is exposure. So what is the expected loss? PD multiplied by LGD multiplied by EAD. Simple. Now all of those models are individual. It's not a simple number that you have to multiply and you have to give the answer. It doesn't work like that. So they are not simply formula. They are driven with so many of business assumptions, exceptions, um, so many exclusions, inclusions, so many things are involved when you're going to prepare all those models. So that's why you need human supervision to satisfy, govern the regulatory, and AI cannot completely replace the credit risk domain at the moment. So let's make it a little more interactive. I'm going to give you five pieces of information about our borrower. Just think about it. Okay. And I want all of you to tell me which one you are worried the most, which type of customer you are worried as a credit risk analyst the most about. So revenue is growing by 18%. Okay. EBITDA margin is 14%. Debt to equity ratio is 3.2. Interest coverage is 1.7. And 38% of revenue comes from the company's top three customers. Now, which one concern you the most? Now I want all of you to put your answer in the chat. Number one option is your revenue. Number two is the leverage, and then three is the interest coverage. So I would request all of you to put your comments, your answers in the comment section. And I hope I answered that question, which many of you have been writing so many times from me, right? So I think all the best, everybody. I would end this live here. And going forward, I would be trying to come live more often to reply to all those things which you have